Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here is your daily technical analysis of LME 3-month copper and aluminium.
LME 3-month copper. A second bearish black crow yesterday, and I suppose a sort of follow-on lower to the previous session's bearish opening black Mariboso. But to be honest, on the surface it didn't seem an enthusiastic one. However, looking a little deeper, and there are some interesting points to it. For starters, we closed back below all the moving averages. The first time we've done that since the end of May. It was also our first close below the long moving average, currently 84.27, since early to mid-June. The top of the market was capped by the declining short medium moving average, currently 84.75. And I'd suggest the market is more hanging from this resistance than being capped by it. Prices pushed down all the way to the February 2013 high at 83.50 before halting. This is just above the very important lower bull channel line, currently at 83.24, of the broken and seemingly since repaired bull channel, currently 83.24 to 94.08, which is highlighted in dark blue on my daily chart. Now, so far today, an interesting piece of action. A lower open, but then a move up all the way to the declining short medium moving average, currently 84.75, before coming back off down to the area round about yesterday's close and looking like a possible inverted hammer pattern right now. LME 3-month aluminium. A third bearish black crow yesterday and a follow-on lower to the previous session's bearish opening black Mariboso and the prior session's key reversal down. There's also a second consecutive close below the August 2018 high at 21.78 and a first close below the significant late October 2022 low at 21.56. The market halted its decline ahead of the October 2022 low at 21.37, with the middle time, currently 21.16, just below that, and that's highlighted in bright red on my daily chart, and that's of the late February to late April bearish Andrews pitchfork. In the bigger picture, we have a number of things going on all at the same time, and also a number of things achieved as well. First off, there is the big November 2022 to May 23 head and shoulders top, which initially looked like a possible continuation pattern, but seemingly turned into a topping pattern before threatening to become a continuation pattern again. This topping pattern has a primary target X down in the 2058 zone, with a harder, much harder to reach secondary target X1 down in the 1858 zone. Next, there are two possible descending triangles and their relevant targets below. The first and larger one is the late February to May action. This utilizes the neckline of the same big head and shoulders top, which is colored in purple, as its base, currently 22.72, and the late February to date downtrend, also colored in purple higher up, currently 24.36, to give a primary target X2 below in the 21.78 zone and a secondary hard reach target X3 down in the 20.88 zone. Target X2 has already been achieved. Then there's the smaller optimized descending triangle, highlighted in dark blue on my daily chart, made up from the small late March to early May head and shoulders top neckline, currently at 22.97, and the optimized late February to date downtrend, currently at 23.78. This had a primary target down at 22.33, a target that's already been achieved, and also a harder to reach secondary target X4 down in the 21.74 zone. Target X4 has also been achieved. This week, and that's actually happened this week, next there is the previously mentioned late February to late April bearish Andrews pitchfork. Now the market is currently in between the middle time below, currently 21.16, and the upper time above, currently 22.67. Now the question I've asked here, and one that seems to have been open for a long time, well, this question has morphed itself into whether the whole action since mid-April has become a possible rectangle pattern. This week the answer seems to have come, and it is yes, but not a wholly definitive one as yet. We'll have to wait and see if the market retraces its steps higher towards the 2200 area. So far today, a slightly higher open and then a straight move up, effectively a strong reactionary move higher with what looks right now like a bullish opening white Mariboso, on the edge actually of being a bullish engulfing pattern, but I don't think it will be. And also threatening this week's action to turn into a pipe bottom. However, we are still well within the bearish Andrews pitchfork. Still.
Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.